Let's discuss the market implications, what the market did today, in fact, and bring in Erin Gibbs. She's senior partner and CIO at Main Street Asset Management. You know, Erin, I'm a Fed watcher. Jay Powell had opened the door to 50 basis point rate hikes, but today he waved a flag and said, if you don't get it, we're going to do whatever it takes. And they are definitely not off the table. And not just one, it could be more. Market sold off, seemed to shrug it off. But did you shrug it off, really?
Well, I think it was interesting how the bond markets reacted versus or the short-term interest rates as well as the equities. Yeah, I think equity markets have shrugged it off. I think more because they like certainty, particularly the equity markets. And so if Powell is reinforcing that they are going to address inflation, that they've made mistakes, that they were, their stories or the expectations of inflation were incorrect. Just admitting that and saying that we're ready to do everything we take is definitely reassuring for the equity investors, and also just reassuring on the economic growth and what companies are able to do within the U.S. So, investors have really been pummeled this year. I mean, if you don't feel exhausted as an investor, just to kind of give you a feel of what we're going through, whenever the VIX is over 30, we call it the extreme fear period, or that's the extreme volatility. And historically, for over the past 30 years, the markets are only in this extreme period for about 10% of the time. Now, year to date, the markets have been in this extreme fear period almost 1/3 of the year. And for the past, 2.5 months or so. So if you don't feel exhausted by volatility, hey, great for you. But there, we really have gone through such an enormous period of dealing with multiple stories, multiple headlines that create that tension and that uncertainty in the markets. And Powell is really doing his absolute best to at least remove the interest rate, the monetary policy concerns.
Well, some have a different concern, though, that he means it and that the Fed's going to move so much that they will tip over the economy. And in fact, you almost have to cause a slowdown in order to bring down inflation. Larry Summers, former Treasury Secretary, arguing that on Bloomberg Television for months now. In that kind of environment, I would guess for some, it's depending on what you're investing in, it's kind of hard to still be unequivocally bullish.
Certainly, I think, if we're talking about potentially creating stagflation, right, because that's what we're talking about. We're not so much really talking about, any type of recession, but a slowdown. Yes, it's difficult to be bullish if companies are going to be facing this high inflation for a longer period of time. But on the other side, markets are very forward-looking. If we know that we have to get through this period, if it, let's say, is a 6 to 9 month period, we still have very good earnings support, even in the face of high inflation. We haven't really seen those earnings and that profit growth really come down. So I think the strength in the U.S. economy is still there underlying. It's really been more about valuation compressions and sort of a buyer strike, really buyers staying on the sidelines.
Where are you finding value at the moment when it comes to mid and small caps? You say that these are almost a defensive play given how much valuations have come down.
Right. So, one of the sort of anomalies that we're seeing right now is that mid caps and small caps are actually trading at about a 25% discount to large caps. And that's really unusual. Certainly, we expect valuation compression in the face of high inflation because it is harder for those smaller growth companies or high interest rates. But typically, it just means that their premium becomes smaller. They normally trade at a higher forward PE than lower. So because we're just seeing this massive, discount, over more than 30% compared to historical norms, even during periods of inflation, it really looks like a defensive play. They've been holding up much better year to date. And so if there's, any dips in that market, I think it's just a safer point as we continue to face some sort of uphill battles within the equity markets over the next couple of months.
Erin Gibbs, Main Street Asset Management CIO.